Hey, founders, got a complicated one to bring up with you, but this one is worth knowing. And depending on how you're structuring and how much time you have to plan for your sale, this could save you a lot of money in taxes. So you may have heard of something called qualifying small business stock or qualified small business exclusion from a certain amount of gains or Section 1202. And if you have, what that means essentially is that certain businesses qualify for a reduction in capital gains. There are some specific rules, and if you thread the needle, it can be great. A few of the qualifiers, if you will. So it has to be a C Corp, LLC, partnership, S Corp, don't qualify. It has to be domestic, and it has to have aggregate net assets. Think of this as balance sheet assets at the time of issuance, not fair market value, of less than $50 million. There are certain excluded industries and there are certain included industries. So you're going to want to talk to a tax advisor or an attorney about that. There are some other kind of traps to run on this, but essentially it's definitely one that if you're thinking about selling your business and you've got some time to plan, depending on what type of entity you have now, you're going to want to talk to your tax advisors about this and your transaction advisors about this before you go to market. So if we can answer any further questions about that or some of the other intricacies about planning for your sale down the road, hit us up at candor-advisors.com. You can ask some questions at Candor AI, where we've got transcripts of 200 plus of my videos and created an AI engine to answer your questions without ever having to engage us, completely for free. And if it's more complicated than that, hit the Talk to Kirk button, give me a little bit more information, and we'll get back to you as soon as we can. All right, thanks. Have a great week.